Everyone, welcome to a brand new episode of the Outlier Podcast. I've got a long time friend with me today, Duncan. Hi, Duncan. How are you doing?
Hey, I'm great, Anurag. It's great to see you. Thanks for having me.
Complete pleasure. A quick introduction to Duncan is one of the very few individuals to whom I reached out when I was new to credit unions and community banks and seeked a lot of his help. So he's one of the friends to whom I really owe a lot. Duncan, thank you for whatever you've done for me over the past couple of years. Really thank you about that. Who is Duncan? Duncan is the CEO of Washington Bankers Association based in Seattle. I was waiting for Duncan to become CEO forever. Now he is finally the CEO. I'm very happy about that. Congratulations on that. I'm really happy.
Thank you. I really appreciate it. It wasn't necessarily something that I started out thinking would be on my path or journey, but I'm thrilled to be here, and what a joy and an honor it is to have a chance to really create something special in this industry and build up something that was already pretty amazing in the WBA team and the community banks that we serve, especially. Just an unbelievable privilege to be in this position.
Absolutely, because what you're doing, I think, has wide-reaching effects because you're helping the banking institution or the ecosystem of Washington become stronger, more powerful, more resilient, and creating a voice of the entire ecosystem. So that's amazing and great. Thank you for whatever you do, Duncan. Let's talk about your journey, right? So what has been your journey so far? Do you want to talk about how was your journey? How did you end up being a WBA and, to where you're now?
Yeah, sure. So I didn't actually intend to land in banking. It wasn't ever on my radar, really. I started my career working in the startup space, and I worked for a series of startups in the Seattle area. In the mid-2000s, there was a pretty healthy and robust startup scene. It was before Amazon really exploded into what we know of it today, right? So before AWS, before Meta and Google really had a presence in the city, there was a real strong underground current of startups. And a big shout out to a guy named Chris Kemp, who founded a startup called Escapia. He was the former chief architect of Classmates.com and would go on to become NASA's first CTO. And I spent a year working for him at his startup, Escapia, learned a ton. I mean, it was an incredible experience. And then I kind of went out on my own, and I had an idea for what we then called Web 2.0, what today we would call social media, and worked on that for a couple of years. And unfortunately didn't work out because of legal issues around APIs. Actually, the same issue that ultimately made it to the Supreme Court with the Google Oracle API copyright fight 20 years later. And so I kind of got a little burned out on the startup and kind of investor money chase, and decided I want to take my skills into the not-for-profit space, and built up a consulting practice on the side. And in 2012, had a mutual colleague who was like, "Hey, I've got a client that is looking for a database and nonprofit, specialist. Would you be interested?" And that client was the Washington Bankers Association, and that contract became a full-time gig. And I just fell in love with the industry and the business, and I loved the dynamic that the organization had, investing in its team, educational opportunities, building up the careers of others. And I said, this is where I want to plant my flag. And that was I started full-time in January 2013, and it's been an unbelievable ride ever since. So all of my professional credentials that I've earned have come from working at WBA. Bank operations diploma from the ABA, getting to go to the Pacific Coast Banking School, which is the graduate school of banking at the Foster School of Business at UW. And just these incredible experiences and learning opportunities that have helped me grow and develop as a person that I just never would have imagined could be on the table in any other industry. So very grateful to be here.
Yeah, absolutely. I mean, your trajectory completely changed after you landed at WBA, and now leading the organizations. I mean, I can be partial because I'm a friend. I'm really proud of you. But for the world, you have done something, man. Like, the world needs to be proud of you. Long story short. Let's talk about fun stuff. Talk about community banking, right? I mean, I don't want to be called as a naysayer, but there are a few things that I think should change, and there are threats, across both consumer and commercial banking. What do you think, Duncan, is the biggest threat to community banks nowadays? You can talk about the Washington perspective, or even at a country perspective. What do you think?
Well, in all honesty, I think the biggest threat is probably mindset. One of the major challenges in banking is that, we're very, very slow to adapt because we're a heavily regulated industry, but sometimes that can be used as an excuse to not change or adapt or respond to the way that the market and economy evolve. And when you think about it, right, banks exist primarily to facilitate the flow of commerce and to deliver capital from those who have it to those who need it, right? That's the business model in a nutshell. That goes back to the Medici family family in medieval Florence. So that's where we get the word bank from, right? The granite benches, the banco. So the concept of keeping our skills fresh and sharp and responding not because we have to, but because we see opportunity. It's not necessarily what we're known for in the industry. And one of the major challenges that we have in the community banking space, especially, is technology, right? Leveraging technology to compete on equal footing with all the other players, whether they be the big national institutions, whether they be fintechs or non-traditional bank entities, or now new entrants coming in with cryptocurrency and stablecoin. Whatever the competitive force is, we have to be able to respond strategically. Remember that hope is not a strategy, and hoping that interest rates go one way or another, we can't control interest rates. So hoping is all we can do, right? So we have to think more strategically about what do we actually have control over. And our infrastructure is one of the few things that we do. But that's the hard part, is that it's seen as a cost center. It's not always seen as the enabler that it is. And so I think mindset around the way that we look at how we deliver our products and services is probably one of the biggest barriers to success that I see in this industry. When I talk to people who leave a community bank relationship, it's never about the people at the bank. It's because so-and-so, such and such institution had better tech, and they wanted an easier, lower friction process. That's an existential threat. And it's one that we talk about, but we don't actually do anything about it. Talk is cheap. Investing in that tech is something that we've done too little of for the past 2 decades, and we are now on the cusp of really truly paying the price.
And there can't be a better way of looking into it, and that's the reason we are doing this podcast. One of the most innovative people in community banking Duncan have ever come across, right? And that's Duncan Taylor for everyone. In terms of regulations, obviously regulations is table stakes. It's important. Otherwise, without regulations, you cannot run an efficient shop, for the lack of better words. But still, it's a bane and boon. I mean, both the sides, right? So where do you think, where is regulations actually helping banks, and where is it actually holding it back?
Yeah, the positive side of regulation is that it gives you a clear framework, right? It tells you what the guardrails are and gives you some specificity about things you can and cannot do. The downside to that is then when the market evolves or changes faster than regulation can keep up, which is what we've experienced over the last 2+ decades, then you're left kind of stuck in this weird sort of neutral zone, right? This liminal space where the borders suddenly start to blur. And the difficult part for us as, again, especially community banks, is that the needs of our customers don't actually change all that much, right? They need access to their finances. They need credit. They need to be able to lever up the capital that they possess with the overall capital they need for whatever their opportunity is, whether it's investing in their business, their education, purchasing a home, a car, any other type of object, right? What we do is we take those dreams and turn them into reality. That hasn't changed since the 1400s. But what has changed is the pace and the ability to potentially make mistakes that create long-term impacts. And the regulatory environment, when it works well, helps stop that from happening. Unfortunately, overly burdensome regulation actually is counterproductive and creates more difficulties that can create those major negative or deleterious effects. And the downstream unintended consequences of overburdened regulation is that fewer customers get access to what they want to create whatever comes next for them. And we're seeing that happen significantly. And regulation, by the way, is not the only issue. Taxes are also a major one, because taxes by definition are extractive from the economic environment, right? If you think about a simple economic system, taxes are the opposite of money creation. Right? Money creation injects money into the system, taxes removes it. And so when you have excess taxation, or you have taxation that isn't appropriately equitable, what ends up happening is it actually reduces the economic activity, which then creates a further downstream effect of lowering tax revenue. So then you raise taxes as a government to try and account for that, and it lowers the revenue. It's called the Laffer curve. And unfortunately, politicians across the board seem to have a very poor understanding of it. So I would say that that's where, the positive side of regulation is clear guide rails. And I'm not anti-regulation. I want appropriate regulation, but I want it to be fair and equitable. And right now it's not. And the other issue is that we as banks are subject to regulations that non-bank entities are not, right? PayPal is not subject to the same disclosure law that banks are subject to. They're not subject to the same fairness and clear communication requirements that banks are required to hold. The same is true, by the way, for Starbucks. Starbucks holds a lot of cash on their balance sheet in the form of gift cards that are unspent. Starbucks is benefiting from that, and those are loans that are not being made, right? Because when those gift cards, that billion plus that's sitting in Starbucks coffers, might be sitting in community banks instead, being lent out to the community. When it sits as a gift card, it's not in use. So those are some of the areas where regulation hasn't really kept up with the reality, right? Should large gift card issuers have some regulatory framework that looks somewhat bank-like? Probably. Should non-bank entities have to have the same guardrails in place that banks have to? Probably. Should all financial institutions who build their businesses off of public infrastructure have to pay something to contribute to that public infrastructure? Probably. But there's an entire class of financial institutions that operate as not-for-profits and thus are exempt from taxes, and those are credit unions. And that inequity manifests in real and meaningful ways. And again, I'm not anti-credit union either when they do what they're supposed to do, what Congress intended in the Credit Union Act, but frequently they're the largest institutions in a given state, and that definitely was not Congress's intent when they created an exemption for taxes for institutions that serve people of a common bond and of limited means. So you asked for a 30-second answer and I gave you 5 minutes. Hashtag you're welcome.
That's the reason it's fun. That's the reason it's fun chatting with you, because you peel the onion and you go into the details that is required. So this was a interesting, thought-provoking answer, Duncan. So thank you for sharing that.
You bet.
Absolutely. In terms of innovation, I mean, both of us know that we are miles away at times, and at times we do reach the mark. So innovation is a very loosely word term, because when loosely used word, I hate being high level. I like going under the hood, but still, if I ask you a broader question about innovation, so how do you think, Duncan, should banks, community banks, balance innovation with risk now? Because community banks are meant to be always be very cautious towards whatever is new. Now with AI coming in or stable coins coming in, just a couple of examples, how do you think, the balance is still there?
Yeah, no, it's a really provocative question, and I'd be lying if I said I had an easy answer. I do think that what we've sometimes lose sight of in the pursuit of innovation is we lose sight of how important the human element is, right? And especially in the community bank space, our people are our strength if we leverage them appropriately. If we fail to do so, then our people can end up being a hindrance to our progress forward. And I think that sometimes it's hard for us to be honest with ourselves and have those conversations. And the community banks that I see that thrive really develop a sharp focus on their why and their mission, and they recruit around that mission, right? They don't so much recruit for specific jobs by themselves in the abstract. They recruit for skill sets or talent dynamics that they need in their workplace, because everything that we really do in banking by and large can be taught on the job. Most of what banking is day to day doesn't require a lot of secret sauce. I mean, yeah, okay, there's some roles where you need some advanced technical training and whatnot, but those are relatively few and far between. Anything generally that's customer facing, you can pretty much learn the role by being on the job and doing it with guidance and supervision and oversight. And so what are the differentiating factors that you really need to have? And the reason why I tie this back to innovation, AI is the perfect example. Far too many organizations are trying to look for ways to use AI to automate human beings out of the process. And I argue, and I'll die on this hill, that's the wrong way to think about AI. AI is not a replacement for humans. AI is a level up or an elevator or a value impact multiplier for humans when used appropriately, at least in its current iteration. But the focus is on automation, trying to remove as many humans out of the process as possible. And you've seen this. There have been disastrous rollouts of AI. We'll use the Canadian airline example, where a major Canadian airline was fined because their AI chat agent quoted a non-existent policy in a customer chat that, completely was wrong, inaccurate, unfair, unethical, illegal, like all those things, right? That's a major risk. Imagine that happening to a bank. That's a headline I never ever want to see. Certainly not one of my members, but any bank included in. And so, and I don't think there's much danger of that because banks are proceeding cautiously as appropriate. But I really do believe that there's major use cases. I mean, we've used automation and machine learning in banking for 2+ decades, right? Your credit score is highly machine learning driven, right? And the difference between generative AI and machine learning is just what's the output, right? But from a technical standpoint, they operate along similar models. So we're not averse to that. But again, when we use it effectively, what it does is it removes some of the grunt work, right? Using AI to help create draft content, to help manage workflows, to highlight things that need, direct human attention. These are all great uses of AI. and use cases that are available today with the tools on the market. So I think that the balance between innovation and regulation is something that we can maintain. It's not necessarily easy, but it's there as a possibility. But again, it goes back to that mindset thing, starting with that really clear why. What's our mission as an organization? Why are we worth investing in versus all the other options that are out there? Why invest your money with us if you're considering a community bank over the S&P 500? If we don't have a really clear and detailed, understandable answer, something digestible but specific, then we're probably missing the mark. And far too often I see organizations that are like, well, we exist because we were founded 100 years ago and inertia is a thing. Yeah. And that's not good enough in 2025 and beyond.
Yeah, all exact points that I wanted to get. Absolutely. Another challenge, Duncan, that I see, not challenge, is real, right? I mean, is talent gap. One is having the same quality talent join a community bank. That's difficult because a community bank is not paying $500,000 for a data scientist, right? Which an Amazon might be able to pay. Because, I mean, if you're in Seattle, for example, you're competing with an Amazon or a Microsoft.
Yep.
Was a community bank. You cannot afford that. So what talent gaps actually worries you right now in the community banking ecosystem?
Yeah, no, there's significant talent gaps. I would say that the majority of the major things that we hear from our members is the need for soft skills. In the ever increasing pursuit of technology, there have been a lot of human skills that have simply been overlooked or in some cases even lost. And the pandemic certainly didn't help with that. But frankly, our traditional education system is very poorly set up to teach what we might call social emotional learning skills, which are really how to be human, right? If you think about humanity's existence on a 24-hour clock. So if humanity's all the hundreds of thousands of years that anatomically modern humans have existed, and you put that on a 24-hour clock, civilization started at 11:55 p.m. at the end of that 24-hour day, right? That's very small microcosm of how long we've lived in conditions like those that we live in now, which means that our instincts, the wiring in our brains, the things that we take for granted as instinctual responses came about in an environment that looks nothing like what we live in today. And the challenge with that is that we assume the way that things are is how they've always been, and they're not. And so we respond as if the way that we live today is quote unquote normal. And as far as our brains are concerned, it's not. It's very, very much not. And so that manifests in a lot of social malaise. It manifests in, I think that it contributes significantly to the mental health crises that we see in our society. And it's not just here in the United States, right? It's all across the world, manifests in different ways. It's everywhere, right? I mean, you've seen it in India. We've talked at length about that. You see it manifest differently, but it's the same kind of something isn't right about this. And obviously, we were all born into this system. We can't just snap our fingers and put the toothpaste back in the tube, but we can have an awareness. And the way that this maps to the talent question is that the organizations that are highest performing right now when it comes to recruiting talent, they do two things really well. One, they recruit for human skills, meaning that they're looking for those soft skills. They write their job descriptions in a way that articulates what need is for the human element, right? And what that looks like for their specific organization and environment. And the other thing that they do is they're not really hiring for a specific job in and of itself. They're hiring for fit. They're looking for people that fit the organizational culture and will grow and enhance it. Those are the high performing orgs today. They're few and far between. High performance is not easy, but those organizations that commit to it excel, and you can see it result in better financial performance. There's a clear line between hiring for fit and the financial success that comes with that. Because guess what? People care about your why. And when they are invested in your collective mission, it's amazing how much they're willing to trade for things like work-life balance and an environment that makes them feel fulfilled and uplifted, not ground down. So for all the orgs that are out there that are like, how do we do this? You're going to have my contact information at the end of this podcast. You can feel free to reach out to me and I'd be happy to talk with you further.
Absolutely. I mean, it's completely worth it. I would encourage my viewers to reach out to Duncan and have his 2 cents. I mean, this is very thought-provoking, Duncan. Last question, Duncan, in the interest of time, since both of us have hard stops. One last question is, how does success for the Washington specifically, for Washington's banking system look like in the next few years? Because banking system across different states are very different and very unique and nuanced. Do talk about Washington's and then maybe cover the broad perspective about the entire country. If that makes sense.
For sure. Yeah. So in Washington state, we have a pretty challenging business environment, right? Businesses pay the significant share of taxes, but there seems to be a really strong anti-business sentiment here, which is really kind of baffling at times because, again, where is the tax base? And so we're a state without an income tax, which means that property taxes and business taxes are the primary sources of revenue. And the state budget has grown and ballooned dramatically in the last decade. It's a more than 7.2% year over year increase if you average it out over the last decade. And so the challenge with that is that, again, taxes are extractive, right? That means reduced economic activity because somebody is paying for them. There's no such thing as a free lunch. So those either get passed on to the end user or consumer, or the business eats it, and that means less room for investment, less room for the activities that help grow an economy. And Washington's also very heavy on trade dependence. And so when factors happen internationally that are completely outside of our control, it has a downstream effect that really hits the state hard. I think my understanding is that we are the number one trade dependent state actually in the country. So all of those factors are running in the background. If the purpose of banking is to facilitate the flow of commerce and to lever up the value of capital so that you can do more with dollars today than you would by waiting for those dollars to grow over time, the power of leverage is really our secret sauce. And leverage is hard in an environment like ours. And so what success looks like to me over the next 2 years is, one, helping lawmakers understand, one, we're not an adversarial industry. We want to work collaboratively as much as possible, but we also want a rational and realistic approach to the business climate here, and reductive in the way that they talk about the impacts of their policy choices. And we want to roll that back. We want to push them to think more holistically about the downstream impacts to communities when access to finance is reduced. We want that to be reflective elsewhere in the country too. And we want to serve as a resource for our fellow state banking associations all across the US. So our long-term success as an association is really growing our multi-state partnership so we can lever the value of what we've been able to do successfully here in Washington state and lever that across the country to the mutual success of our fellow state associations. So that's what I see in the microcosm of Washington, and then looking at the big picture nationwide. And I promised my contact info, so here it is. For all of your listeners out there, my email address is duncan@wabankers.com. My cell phone number is 317-272. You can reach out to me anytime. You can call me, you can text me, you can send me a carrier pigeon. I don't care. You can reach out. If you are hearing this podcast and you want more, or you want to tell me all the ways that I'm wrong, I would love to hear from you. And again, it's 317-92. And on LinkedIn, I'm Duncan J. Taylor. So feel free to reach out anytime. And for all of Anurag's listeners, thank you so much for joining this podcast. It's been a pleasure to be with you. And Anurag, thanks for the invite, bud.
Absolutely. Thank you, sir. I appreciate this time you're spending with us, and we're looking forward to airing this episode soon. Thank you, sir.